Investors sold chip stocks today and shifted to software companies, even though Nvidia reported a much stronger earnings quarter than Salesforce. So let's get more from Amanda Agati, Chief Investment Officer at PNC Asset Management Group. It's good to have you join us. Thanks for your time.
Thanks so much for having me.
So what do you think's happening here as we're seeing investors kind of shift their focus, especially after what Nvidia reported yesterday?
Yeah, I have to say it's a little frustrating considering how strong Nvidia's result was last night. Is it ever going to be good enough? I think is the key question. And the challenge in answering that is when you're trading at a forward P in excess of 40 times, it doesn't leave a lot of room for mixed feelings about guidance. Even though the results were strong and guidance was strong, it's a market where Nvidia is effectively being priced to perfection. And so I think there is some investor disappointment there, but this is a little bit what I would describe as sort of natural and healthy recalibration in a market that's been only focused on Nvidia or even the Magnificent Seven for a multi-year period now. Like, we can recalibrate against some of these lofty valuations, and it doesn't mean the story is over. It's just sort of resetting, I think, the bar a bit in terms of investor expectations. We still think it's very early innings, and there's a lot of upside to go. I just think in the short run, there's a lot of noise around who's going to be the disruptor and who's ultimately going to be disrupted.
I like how you said that healthy recalibration. It sounds as though that might be something the market needed. Do you think investor reactions, though, like despite these earnings results from Nvidia, are influenced by concerns that these stocks appear overvalued as well? Like, is that part of it?
I think it has to be a natural part of the conversation. I think the biggest challenge that I find with investors thinking about like what the quote unquote right P multiple should be for these exposures is you have to be really creative about what the future is going to look like, right? There's so much money going in terms of CapEx right now. We haven't really seen material returns on invested capital coming back yet. What are the new business models? What are the use cases? What are the fee, revenue generating models that are going to be built off all of this infrastructure? And so I think it's very hard for investors in this moment to think creatively about the future. It's sort of like we're very myopically focused on the here and now. And in order to justify these, more elevated, not bubbly, but elevated valuations, I think you have to kind of see into or get creative about what the future may hold.
When it comes to the software sector, it's been through a bit of a rocky ride since 2026 began. Do you think it's kind of reached its bottom now and we'll start to see some growth from here? Or what do you think is happening there?
I'd love to say that we're at an inflection point there. I think it's still a little bit uncertain. I would describe as maybe purple hazy as it relates to the outlook for software, because we still don't know yet who the winners and losers are in terms of this AI, automation, robotics sort of revolution that's happening here. What's going on in the short run is investors saying, well, software's in the crosshairs. They're clearly going to be disrupted. I'm not sure that that's the right answer. It's sort of throwing the baby out with the bathwater all at once, right? Again, very myopically focused in this moment. So I don't think software stocks go away. I don't know that, PE multiples need to stay where they are. I think they've been unfairly punished here. But I don't think that the entire industry or sector or cohort is necessarily going to look the same a few years from now as it does today. And I think it's the natural part of this technological and innovation related cycle.
I mean, that was going to be my next question. Like, are these fears about AI disruption over exaggerated? Because really, when you look at like the software sector, financial services, cybersecurity, private credit, there's fears within all of those sectors. So you think maybe they are a little over exaggerated, if I heard you correctly. Is there going to be winners and losers within each sector?
I do think that there will be winners and losers in each sector. I do think that some of the near-term noise and some of the resets that we've had are a bit overdone. That being said, the whole point of this is disruption, right? So to think that we're going to have all of this innovation, all of this investment go into effectively Web 3.0, right? This is sort of the second coming or maybe third coming, as it were, relative to when we started to see Amazon and Uber and Lyft come on the scene from Web 2.0. This is the next iteration of it. AI, automation, robotics. I throw blockchain technology in there too. It's that next iteration. And I think it is going to be highly disruptive, but in a good way, right? Again, winners and losers. It is going to have implications for the jobs market. There's no question. But we need to think about embracing, I think, a lot of this disruption and figure out how to solve for some of those pieces of either the economy or the market that get disrupted. I just think it's early yet. We haven't quite figured out what all those pieces will look like.
Just in our last minute here, you mentioned that companies continue to pass on higher prices and expand their earnings margins. Where are these efficiencies coming from?
Well, I think in general, as a function of Q4 earnings season in particular, we were pleasantly surprised by the margin expansion really across the board. So it's not just about one name or seven names. We're seeing not only broader participation in terms of the names in the S&P 500, but also market breadth just in general in terms of the underlying fundamentals. So it's not one particular sector or industry. It was really a broad-based theme, and I think it's companies getting creative around how to drive operating leverage, and that they can pull a bunch of different levers in this, but also a piece of it is still being able to pass at least some of higher costs on to consumers. The consumer continues to hang in there, despite being through the ringer over the last few years. And so there is going to be a point where I think the consumer is going to say enough already, but we did not see that show up in Q4 results.
Okay, we'll leave it there. Amanda Agati, Chief Investment Officer at PNC Asset Management Group. Appreciate your time today. Thanks so much for joining us.